Welcome back into the show. Today we're going to be talking about something I think you guys will like, and that is an XRP ETF, and with an expert that knows a lot about hedging on inflation and what that means for you. My name is Paul Barrow. Welcome back in. Kind of go right into it. I want to, of course, bring in Sal Gilbertie, who comes in from a fund called Teucrium. Nice to have you, Sal.
Thanks, Paul. Nice to be here.
Okay, so let's get into it quickly. Of course, you made the cover of Forbes talking about playing the fields. Now, most of your ETF background has been done in things other than digital assets. So talk to me a little bit about where you guys came from. You've been around for quite a while, obviously, in the ETF space. Explain to me more about Teucrium.
Sure. We've been around for quite a while. I was working at Societe Generale, trading a book around ethanol and agricultural products. And I had started at Cargill way back in the day. So I have a strong energy and agriculture background. So we launched ETFs that were energy and agriculture based. We were not first in the energy. They were very good ETFs, but if you're not first, it doesn't really work out. So
Right.
We closed those funds. We kept the agricultural ETFs, which remain to this day very successful. And then we got into crypto. We did file for a Bitcoin early on, a Bitcoin futures based. Our expertise is derivatives. That's where we live.
Mm-hmm.
And so when they filed for futures, we were very excited. We filed along with a number of other people, but we filed on a unique way under 33 Act, which in those days, that's what you had to file under. Chairman Gensler changed the rules midstream, went to 40 Act, and a lot of people beat us to the game. And we decided that wasn't going to happen again. And I'm an XRP guy. I really am a fan of what Ripple's trying to do in the blockchain future of finance. And so when the opportunity came along, given that they announced that there were going to be XRP futures, we filed for a fund that contained derivatives, not just futures, swaps as well. And when other competitors came in filing for the same thing, we said, well, all right, how can we be first? We have a great ticker. I mean, XXRP, double exposure, double XRP. And so to capitalize on that, we started the fund with a swap based out of Europe, actually. It was a European ETF in Switzerland. We based the swap on. And that we got to jump on everybody. The market clearly wanted it. People want this, the XRP army, as they call it. They're very loyal and they're very aggressive. And I think a volatile product like this, as you mentioned, it just had immense investor demand, which we saw immediately.
Yeah, and we're seeing more of that. I was looking at your line list of expertise all the way back to 2009. So you've seen just about every kind of ETF that could be out there, including even white label solution services, which is kind of interesting because I think we're going to see more of that in the digital asset space coming up. And within what you're doing, if you look at the 2x long daily, and especially on XXRP, explain to us a little bit about this, how it works, how you guys are a little bit different.
Sure, and we're different in that we packaged XRP inside of this. We're the same in that the 2X product is not our invention. We put XRP inside, and 2X is, people need to understand, they are designed to capture twice the performance of an asset, whatever that asset is, in a single day. So in a single trading day, they capture hopefully 200% or as near to it as you can get after fees and expenses and trading slippage. That's what it does. And so these things reset every day. In other words, if the price goes up and no new money flows in or out, we have to buy more in order to stay 200% leveraged. If the price goes down, we have to sell in order to stay properly 200% leveraged, not over leveraged. And so given that you're resetting every day, these products, especially these long only 2X products like XXRP is, they go up in an up market, but they go down in a sideways or down market. So you can lose money in 2 out of 3 scenarios. People need to be very aware of that.
Yeah, and I think, looking at your website here kind of goes through a little bit of the fun facts if you guys want to learn about that on XXRP. So could the XRP army, and also I think people that are interested in Ripple in general, just looking at what Ripple is doing, what do you feel is the perfect demographic for investing in this?
What we see is people, all spectrum of ages. I would say from probably the 20s through their 60s of people that we've met in terms of age, and all races, creeds, sexes. They're all in this. I think it's people who have a core understanding of where Ripple is positioning itself, where the token XRP can go, and then they really want to trade aggressively, and that's what this product is for: aggressive traders.
Well, I think the aggressive side of it too, I think is a big deal. Do you feel like the extra volatility around XXRP's success is actually not a bug, but a feature in how the ETF operates?
Yeah, absolutely. It's a feature. Yeah. There's no question. And so long as you could stay on top of keeping the position, in line with the objective of a 200% a day performance, give or take all the static around these things, I think it's a benefit. That's why that's why the fund exists, for the volatility.
Yeah, for sure. Absolutely. I was looking at Michael Saylor. He kind of gets into it right there. Volatility, a gift to the faithful, which is what we're seeing right now in a lot of digital assets outside Bitcoin. XRP obviously is one of them. Now you crafted something that is called the Golden Grain Circle. Explain to me what that is.
Sure. We've learned over the years of running our grain funds that grains have a very specific cycle, and it's literally cosmic. So you can only grow things in the summer, and there's nothing growing in the winter. And so what happens is grains have a natural cyclicality, and today as we speak, we actually begin the seasonal low of grains. But that's because of harvest approaching. But the golden grain cycle is a very specific cycle. Grains and all agricultural products farmers are subsidized throughout the world. And so in a nutshell, every government in the world subsidizes their farmers, which means on the big commodities like corn, soybeans, wheat, whatever it is, farmers get used to operating at break even because governments want to subsidize their farmers so that they will produce even when they're not making money. They're just breaking even. And luckily, the farmer's psychology is, I'm a farmer. I get out there, I scratch dirt, I plant. That's what I do. Mm-hmm. And so with the subsidies, the natural price range of an agricultural commodity is actually break even. And corn's got a really good one. I saw you had the picture up there. The last 17 or 18 years since the Renewable Fuels Act, which reset prices, corn is traded at a break even, futures equivalent break even price. And this is a picture of the spot continuation futures, so the front month futures. When corn futures are between $3.50 and $4 a bushel, they kind of trade sideways until there's a drought or a war. And then they literally double. That has happened 3 times in the last 17 years. So if there's an asset that doubles from the same price and then goes back to that price over time, that's, you probably want to allocate a little something to that when it goes back to the price. And that's the golden grain cycle. So stage 1 is when you're trading at break even, which is where we've just hit. We've come back to break even. Stage 2 is when you're shooting higher. The price is shooting higher because remember, nobody skips their bagel when there's a drought in Kansas. They don't care if the wheat grows or not, they're still going to eat their bagel. And so that causes the demand for grains to go higher. And of course, corn is used in everything from food to fuel to just everything. Right. So corn's a big one. And so we've been several years of coming back down off the post-war highs of all grains that grains set when Russia invaded. And so we're back at that break-even level. It is time for strategic allocators to take a hard look at this and realize you may have to wait. You've had to wait for between 2 and 6 years over the last 17. But history has shown you that, again, corn has doubled 3 times from the price where it is right now in the last 17 years. So it's back there. How long you have to wait, we don't know. But for allocators, it's just an obvious thing to have a look at.
Is there any cycle that is lining up for the digital asset side of things where you can see maybe an XRP cycle starting to play into this? Most of these have been, accommodating most of the digital asset side of whether you think and or believe in the Fourier cycle where Bitcoin and most of the major, top 20 tokens kind of react. Anything that you've noticed so far?
I tell you what, we haven't seen anything as defined as the grain cycles and the corn cycle. That said, the 4-year cycle has some validity, and the weekend. There's a cyclicality to weekend trading that people have noticed on different coins, and that's something that pay attention to if you're a short-term trader for sure.
Listen, we're watching crypto treasury companies just starting to populate the land. If you look at the aggregate market cap right now, XRP starting to lead the way. Of course, we've seen Solana and even Ethereum to a certain extent. When you compare the treasury companies, which are basically going out buying an asset, maybe they're doing some other functions that's driving some revenue into the company, versus an ETF. ETF a little bit safer, in most cases, a lot easier to understand. Which is this a comparison of how investors, or do you think they're just going to diversify and maybe go in both?
I'm thinking both, because I'm not sure one is safer than the other. I do think, we've seen with MicroStrategy the premium built in to companies that do this. Now, how long that premium is going to stay there, who knows? There are already hedge funds trying to arb that away, and it may or may not get arbed away. So I think that for sophisticated traders with a lot of capital to allocate, they'll likely to use both. Why not?
Interesting. Do you think we're going to see some more acquisition? I mean, there has been some signals here that we could see thumbs up now, which is involved with the Trumps, investing into XRP potentially as a buy. That might mean a possible, play here. Do you think we're going to see more of this in terms of the Treasury strategy overall, especially around the XRP ecosystem? Do you think that's going to continue to go?
I do think it's going to continue to go. I think Bitcoin leads it, obviously, and I think XRP has a lot to go because XRP's got the use case. So as the use case builds out, as Ripple builds out their use case, I think that more and more people will see the appeal to XRP. And Bitcoin's a pretty clean story. It's a store of wealth. That's what it is. It's digital gold, literally. And I think that crypto in general is a boon to fiat currency. People say it's going to replace fiat currency. Crypto is the greatest thing to happen to fiat currency in decades, maybe ever, because everybody has to convert their crypto eventually into a fiat currency of some sort or another, because we're not in a crypto ecosystem, we're in a fiat currency ecosystem. Crypto just allows you to get more of that currency. So I think that as people look, the number of people who said to me, I have cash in T-bills or money market from a personal level or a treasury level, who say, why wouldn't I put some in crypto? Given what's happened in the past, given what the potential is, why wouldn't I allocate at least some of that to crypto? It's foolish not to. And that attitude is growing. That's not something that's going away. In fact, I think it's nascent. I think it's just beginning. And so, I think there's a big future here for.
Well, Sal, you guys have been around for a long time, so you've seen these market cycles ebb and flow, and now we're in one where digital assets are now finally kind of growing up and making their way to Wall Street and their trek to Washington and all of that. You say it's a nascent market. How big could this be?
I think that crypto can be bigger than anyone imagines, because the people who focus on cap table and say there's not enough money to make these cap tables that big, that's not true, because it's got nothing to do with the amount of money. I mean, it does have to do with the amount of money, but not all of the crypto is going to be out there trading. So the cap table, it's like an AI company being worth, $500 billion. It's because there are only a limited number of shares that actually trade on that thing. And so that's how it's going to work with crypto. People are going to buy it and hold it and store it. What's Ripple going to do with its 40 billion XRP? Given that they filed to be a bank, there's one of the leading theories that they just hold that on their balance sheet. They get their banking license and they become a top 20 capitalized bank in the world. That's with XRP at $3. XRP goes to, some multiple of $3. They become a top 10 bank or even the top bank in terms of capitalization. That's pretty astounding.
That would be insanely astounding. And I think a lot of people are sleeping on that idea. If you look at leveraged ETFs, do you feel like they'll ever be on chain to where we'd be able to trade these on chain?
I think everything will be on chain. I don't think there's anything that won't eventually be on chain. There's no question.
Does this remove the need for a leveraged ETF in the future?
No, because I think that I don't even understand on-chain leverage trading as well as I should. And you don't need to understand the leverage in an ETF in order to actually trade it. Now you should, and you should read the prospectus and know the risk. But come on, it's the ease of access through ETFs is really understandable by everybody with a stock account. Whereas on-chain leverage is kind of complicated.
Well, you're exactly right. That's the point I'm getting at. And this is kind of plugging the two questions together, is you've got adoption curves occurring right now. The easy access is going to be ETFs because it's the thing that most of traditional finance understands. And then maybe next layer up, maybe a treasury play where they're like, oh, they're buying the asset, so it makes asset go up. I'm going to buy that stock. So you're seeing a lot of those plays, whether it's BM&R with what Tom Lee's doing or Joseph Lubin over at or Sharplink Gaming. That's an interesting component, though, because your point is that we're going to see a mad rush potentially of traditional finance, and ETFs could be the bullseye where they come first. Do you think that is the case?
I do think that that's the case. I think ETFs are the bulls. I also think that the appeal to some of these treasury companies, and a lot of people aren't aware, this is getting in the weeds, but the wirehouses. So you can access almost any stock and any leverage product in like your electronic, your e-brokers account. Okay. Yep. But if you go to Merrill Lynch or UBS or Wells Fargo, most of even the ETFs that are not leveraged, that are holding the physical crypto, they are not authorized on those platforms in any manner other than what's called unsolicited, meaning you have to call your broker and ask them to make the trade. Your broker cannot call you and recommend it, nor can your broker who has authority over your account just put your money in there. So I think there are trillions of dollars to which that don't have easy access right now, even to the ETFs, but those advisors can recommend a stock to buy, whereas they won't let them recommend an ETF. They'll let them recommend a stock. So there's a lot going on out here and a lot of pent up money that is not placed in. Michael Saylor has a point. There's an immense amount of money that isn't even close to in these markets yet.
Yeah, it's mind boggling if you look at that. I want to get a few predictions from you. If you look at a normal XRP ETF, when do you think that would be approved right now? Everybody's kind of targeting September. Do you think it'll happen this year?
I think it'll happen this year, yeah. I don't know about September, but I would be surprised if they push it to 2026.
What about in comparison between a normal XRP ETF and what you're doing with XXRP? Is just a normal XRP ETF going to be too boring for people that might want to go this route versus what you're doing?
It might be. I think for anybody who wants a long-term allocation, they're going to go into the normal ETF. They should. These levered ETFs are short-term play. So anybody who wants to get some juice or have some fun, the levered ETFs are probably going to have an appeal to them, and they've got to be careful because they're very risky products. But if you're going to buy and hold, which people are going to allocate to these things and just hold them, you should not be using a levered product. Just use a regular product.
Hey, listen, commodities are the way that people make ridiculous amounts of money in a very short period of time, because you're exactly right. And of course, you guys leading the way in terms of commodity trading out there on the ETF side. So expertise, kudos to you. Biggest XRP catalyst that you think will happen? I mean, the banking license one, sure, for Ripple. Obviously, we've already seen quite a few, but there's also involvement in potentially a SWIFT movement in terms of cross-border payments. What would be your catalyst that you think would move the market?
I think those are both catalysts. I think that it's hard to say. If they get approved as a bank and then announce they're not going to sell any more XRP onto the market because they want to capitalize the bank, I think that would be an enormous impetus for price. That's gigantic. But then I think as SWIFT breaks down and ISO 222, I think that they're not projecting SWIFT to use it for a few years yet to be totally compliant with that. Whereas I think that when Ripple flips all the switches and all these NDAs they talk about come alive, and when you start seeing banks announce, we did this much on the blockchain ledger in terms of moving your money, and we did this much on SWIFT, and the SWIFT is going down and blockchain's going up, I think that's a big deal. And there's another point to be made here for the economy as a whole. Most people don't understand that banks have to keep capital in both places. If you want to send money from Miami to Tokyo, okay, banks have to have money in Tokyo and money in Miami under the current system. That all goes away. All that capital is going to be freed up with the blockchain. That's going to burnish the bank's balance sheets even more. But more so, they're going to be able to loan money. They're going to be able to finance their trading desks. It's going to open up so much capital to economic growth in general around the globe. It's a wonderful thing. The blockchain is literally going to open up value because it's going to unlock a lot of frozen money on the bank's balance sheets. And that's really important. Nobody seems to be talking about that.
Well, we'll get to that in a second, because there's kind of a bit of a bombshell report that's coming out of D.C. with Eleanor Terrett reporting on it. But before I do that, XRP price by end of year. Do you have a prediction?
No, we're not in the price prediction business. We'll see. We'll see what happens.
All right, so let me show you something here. There's a lot of uncertainty coming out of the Genius Act, and of course, many of the issues are stemming from the banking ecosystem. A couple of points I want to highlight right now. We're currently witnessing potentially an exodus of digital assets. This is all starting in terms of how the OCC is dealing with it, but more importantly, it's basically they're concerned. And I think the number right now was 6 trillion further on in the article. Yeah, right here. Stablecoins could drive up to 6.6 trillion in bank deposit outflows if they're allowed to offer interest or yield. So it appears that the banking industry is panicking right now. How do you make what Ripple would do different than what a JP Morgan Chase would do? Because they're going at the same industry right now.
Right. Well, they'll both need a staple going, and Ripple has one. Okay.
Exactly.
And, there are a couple of entrepreneurs out there who said, look, stablecoin's the best business they've ever seen. People give you their money, you invest it in treasuries and keep the interest. It's free money. So until that dynamic changes, I don't think the banks have to worry about that. I think for people to attract money to their stablecoin, they might do that. But let's face it, stablecoins have a use case. They're a business case. People need them for certain things. And so I think that the people issuing the stable coins are going to hold on to that interest as long as they can. The only market force that's going to allow them to have to pay out interest is when the banks use their own stable coins. Stop using somebody else's and issue their own. Then just like it's a war of the money markets, it'll be a war of the stable coins.
Exactly. Yeah. Well, I'm concerned that those would not necessarily be as interesting, because obviously the ability on an open stablecoin protocol, the capacity of being able to use it elsewhere is a significant advantage. If you look at the economic safety ratings right now on stablecoin, Ripple leading the way right there. Of course, you got even GUSD, Pax Gold, all that. What about Teucrium holding RLUSD?
There's no question that if we had use for a stable coin, we would use RLUSD. There is no question about it. And we are a hidden road client, so I'm assuming that at some point they're going to ramp up the use of the blockchain, or we're going to have very fast settlements in our products and in our daily dealings, and we'll of course have some RLUSD. There's no doubt. Yeah, no doubt.
I like it. Hey, listen, Sal, it's good to always kind of dive a little deeper on what's going on in the ecosystem. It's getting to be exciting times right now, I think, for the fintech community, as well as the new financial wave that seems to be sweeping through Wall Street right now. So thanks so much for coming in. We'll definitely have you back on the show as things develop.
Thanks, Paul. It's a pleasure.
You bet. All right. You guys, if you're not in our Diamond Circle, that's a great place to get additional content from us. And you can do that by just clicking the link down below. You'll join, and it's absolutely free. So make sure and do that. Follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.